Hi, I'm Max Keiser. This is the Keiser Report. You know, this show has single-handedly moved the price of silver from $26.50 to over $40 in the last few months, since November. We make the market. Goldman Sachs says they're a market maker. JP Morgan says, oh, we had liquidity. They're oops, you got to beep that out. They don't know jack. We make the market. We're pushing the price of silver to $500 an ounce. And you know what? Now the rumor is that a Russian billionaire, of course, somebody who watches this show, is trying to corner the silver market, like Warren Buffett tried in 1998, like the Hunt brothers tried back in 1980. What does this mean? It means the price is going a lot higher. Will it then drop? No, because the dollar is being rejected as the world reserve currency. We're going back to a precious metal standard, and that high that gold and silver achieve will be the permanent plateau upon which the global economy will be re-architected in the image that I have created. Stacy Herbert, talk to me, babe.
Max, we're going to get to those rumors, but I think those rumors are actually being spread by the Obama administration and Timmy Geithner. But because we're going to look at the globe fleeing the dollar flood and the dollar fraud. So that's in our first headline. Gotta love it. I take this from maxkeiser.com. You did a good summation there, but it's a picture of you holding up fraud, and you did warn, this is you on some news program a few years ago, and you were warning of exactly what we're seeing now in terms of the currency collapse. And this is prior to the whole collapse of the financial system, when you were saying it was the likes of Goldman Sachs and JP Morgan's fraud that you would see exactly the situation we're in. As you see under your picture there with holding the sign fraud, we have an image of silver soaring on Thursday of last week. These are part and parcel of the dollar being overprinted and the dollar being backed by fraud.
Yes, that's correct. At the time, the bankers on Wall Street were pushing the line that, well, it was a liquidity problem, or is it an insolvency issue, or is it a market historical change that we didn't see coming? And I pointed out at the time that it was just basically fraud. And now it's coming out clearly. I mean, Goldman Sachs, Lloyd Blankfein is wanted before Congress to testify for perjury because, as I've said on this show unequivocally, he's committed fraud, F-R-A-U-D, fraud. There's no debate about it. He is a frickin' crook, as in larcenistic. I put another beep in there. I'll fill in a bad word later.
And it will always be alleged because, of course, there will be no justice delivered. The Department of Justice will never investigate these.
I'll give you a ledge. It's 30 stories high. Step on it, Lloyd Blankfein, and jump off! The guy is a complete menace to society. The fact that he's allowed one extra breath in this world is Obama's shame. That'll be on Obama's legacy. You do Wikipedia for Barack Obama, it'll be, he let Lloyd Blankfein breathe. That's his legacy.
So anyway, so everybody's like trying to come up with conspiracy theories and rumors to explain the soaring gold and silver prices, the soaring oil prices, the soaring commodity prices. But the Wall Street Journal headline reads, "Fleeing the dollar flood. The world tries to protect itself from U.S. monetary policy." So while Americans are like worrying about Planned Parenthood and NPR, like $5 million budgets there, the world is meeting behind their backs, or actually out in the open, and planning an alternative to the U.S. dollar.
Right. The U.S. dollar will be rolled up into a new global currency, and it'll become extinct. And everything in America will be double, triple, quadruple in price, and the standard of living will be one of the lowest in the lowest decile of all the countries in the world.
And I mentioned the dollar fraud. So this brings me to this next headline, chart of the day. This is Jamie Dimon's worst nightmare. So this is Joe Wiesenthal, Business Insider, well-known paper bug, and he's saying that JP Morgan is warning about the domino effect of a U.S. Treasury technical default. So JP Morgan is warning America that there'll be crisis if you don't raise the debt ceiling. And the chart, of course, is in 2008, post-Lehman collapse, when money market funds were like fled, and there was basically a run on the banks. And he thinks that's Jamie Dimon's worst nightmare.
Yeah.
But I posit it's this image of silver and this image of Max Keiser.
Well, Jamie Dimon, let me explain something. Anyone holding a U.S. Treasury bond is doing so because they want to be a martyr. They want their net worth to be eviscerated by Jamie Dimon, the terrorist. And as I've said many times before, now you've got not only Bill Gross over at PIMCO, who's shorting U.S. Treasury bonds. He's just not selling what he's got. He's selling them short, which means he's making a huge negative bet against them. I just saw that Jim Rogers, another, big-time, world-famous money manager extraordinaire, saying, yeah, I'm going to start selling U.S. Treasury bonds. When the whole globe gangs up and starts to sell short U.S. government Treasury bonds, forcing interest rates up 5-6% 5 points in a matter of, a couple of weeks, then, of course, it'll be time to sing Adios, America.
Well, but so as that happens, you see the precious metals and commodity prices shooting up, but it's also the dollar collapsing. You saw on the dollar index, it's down below 74. So, and instead of looking at that, however, people come up with this conspiracy theories like we see Zero Hedge reporting on the theories. Silver surges over 46.25 per ounce as rumors of a short squeeze and cornering market gain credence. So apparently Zurich and London are abuzz with rumors that a Russian billionaire is buying up huge quantities of silver.
Mm-hmm. Yuri, Sergey, fill in the Russian billionaire. They're all interested because it's a natural corner. It's a natural play because there's very limited supply of silver. You can, for $30 or $40 billion, which for the average Russian billionaire is the amount of money they carry around in their sock, they can corner this entire market and double or triple their money in 2 weeks. Of course you're going to do that. You listen to my show, of course, and you're going to make a lot of money. So next time I'm in Moscow, you owe me some borscht.
Well, on the other side of the equation, so it's ironic that the very people perpetrating this myth that there's somebody cornering the market. On the other side of the equation, you have JP Morgan with naked shorts, which is cornering the market on the other side. Embry, JP Morgan short position causing massive silver spike. So this is John Embry from Sprott Asset Management, and they're the biggest buyers of silver in the world in the last few years. And they argue that the massive short position that is held by JP Morgan Chase in particular is the cause for the spike. This is a quote from John Embry. I mean, this is becoming, I think, a huge millstone around their neck. And if you don't understand that, I don't think you can appreciate the upside thrust in this.
Right. Just to break this down for folks who haven't been up to speed on this. In other words, JP Morgan in the futures market, for every order of an ounce that comes in to buy, they sell 10 that they don't have. It's a naked short sell. They sell silver that doesn't exist in an attempt to force the market down, to keep it down artificially. Now, what guys like John Embry and Eric Sprott have figured out is that, well, every month at the COMEX and other exchanges, they've got to do the delivery of the contracts that are not, in fact, going to roll over into the next futures month. And they have been taking physical delivery, as well as the Silver Liberation Army that we started on this show, taking physical delivery. So every single month it gets more to the point where the ability for JP Morgan to keep the price artificially cheap with these mammoth short sales that are financed with the artificially cheap interest rates, thanks to Ben Bernanke and Tim Geithner. That's why interest rates are so cheap. It's not to create jobs. They don't give a fig about your frickin' job. It's to help JP Morgan keep things cheap and artificially low so that they can pay themselves those big frickin' Christmas bonuses at your expense. But the game is up. And so here's my prediction, Stacy Herbert. Remember, Enron. For week after week after week, people said this company is an $80 billion company. They're geniuses. They're the smartest guys in the room. And then one day, somebody said, hey, guess what? Enron is nothing but a big shell game. And the stock collapsed in a day to zero. 80 billion wiped out in a day. JP Morgan is a $136 billion shell game. Once this is totally exposed, that stock's going to zero in one day. Mark my word. If you're a hedge fund, sell JP Morgan stock naked short until your hands bleed. Force this sucker down. Put terrorism out of business. Put Jamie Dimon in the men's room doing, fluff jobs for the executives for 2 cents a crack. That's all he's worth.
Well, on top of that, there's the collapse of the U.S. dollar. Geithner downgrades his own credibility to junk, says Bloomberg. Treasury Secretary Tim Geithner was on Fox Business News, and he was asked, is there a risk that the United States could lose its AAA credit rating, yes or no? He responded, no risk of that.
Well, that's false. He's lying. But when you lie in front of Congress, like Geithner does every other week, or Hank Paulson does, or Ben Bernanke, you become inured to the consequences of lying. They're lying-aholics.
But this reminds me of Enron as well. When Enron, there was one single analyst, I forget her name, it was a woman who was saying Enron is a black box of nothingness. It's all fraud. And she was attacked by everybody else in the mainstream media, all the powerful people like Ken Lay. And they said it was the strongest company. They're friends with Bush's. They're a powerful political force. And it evaporated in one day. And the same thing here is he's attacking the people who point out that it's a fraud,
it's
the
classic,
U.S. dollar.
Classic Icarus, flying too close to the sun, blank flying saying they're doing God's work. Tim Geithner thinking the U.S. Treasury bond is somehow worth something that it's not. And they believe that they are in league with their God, because there's Tim Geithner in heaven slurping on the ambrosia of his own malfeasance that he inhales copiously to give himself the voluminous attitude of his God in his own mind, not realizing that he's actually lying in the gutter drinking Mad Dog 2020 and being kicked in the head by some poor person he's bankrupted. That's who's running the Treasury in America.
And then finally, I talked about the dollar fraud and the fraud as the system of America. And rumor becomes reality, ratings, action, tip-off, question mark. This is Carl Denninger. And he's asking about this headline from Washington Post, where Obama administration officials tried to keep S&P rating at stable. So apparently S&P was meeting with the Treasury Department officials and the Obama administration, and they were arguing whether or not the U.S. outlook would be downgraded. So the question is, there was action, like PIMCO got big news last week when they were shorting U.S. Treasuries, which was a seismic event, but were they tipped off by the likes of Timothy Geithner?
Well, you know, remember leading up to the Iraq War invasion, Colin Powell went before the UN with a vial full of talcum powder and said, this is going to kill everybody. And that was all prearranged stagecraft to get Halliburton a bunch of contracts to murder people senselessly in Iraq. So now it's just Tim Geithner deciding to murder people senselessly with inflation, and they prearrange all these S&P ratings, and they cook the books, and the proof is in the dollar, which is collapsing, and they're going offline, baby. If you have anything in U.S. dollars, prepare to lose it all. It's all going to... Oops, I'm so sorry. Anyway, Stacy Herbert, thanks so much for being on the Keiser Report.
Thank you, Max.
When I come back, I'll be speaking with Matt Taibbi, so don't go away. Welcome back to the Keiser Report. Time now to go to New York and talk with Rolling Stone journalist Matt Taibbi. Matt, welcome back to the Keiser Report.
How you doing, Max?
All right. Matt, I want to talk to you about your piece, The Real Housewives of Wall Street. But first, tell us, what is TALF?
It's the Term Asset-Backed Lending Facility. It's a bailout program that was created by the Fed, and it was ostensibly designed to help spur consumer lending. You know, it's sort of at the end of 2008, after the crash. There was a whole bunch of panic on Wall Street, and it really actually started with car dealerships that were unable to get financing from the banks as usual, because the banks were just afraid to invest in any kind of asset-backed securities. So the government came up with this program, the TALF, and it essentially provided a government backstop for the banks to lend to consumer outlets like car dealerships, and it was eventually expanded to student loans and commercial mortgages and basically everything else under the sun.
Okay, so flashback to 2008. The economy in the world is about to crash. Hank Paulson goes before Congress. He extorts $750 billion with a one-page memo, or crashed the market and got all that money, introduced us to something called TARP, and then this was followed up by TALF. And now, pick up the story with what you're writing about, the Real Housewives of Wall Street and how they fit into this TALF story, Matt Taibbi.
The backstory here is, you know, obviously people in Congress for ages have been trying to get the Fed's books open, and in the debate over the Dodd-Frank bill last year, there was a sort of a bipartisan coalition with Bernie Sanders and Ron Paul and Alan Grayson, and they were kind of fighting just generally to get the Fed's books open. In the end, they weren't able to completely open the Fed's accounting, but they were able to get a small window of numbers from the Fed's activities from the end of 2007 through, say, the middle of 2009. And this basically covered the entire bailout. It was a very limited look at the Fed's books, but one of the things they were allowed to see was who had received TALF loans. It It was really TALF and the Fed's emergency lending. So they ended up with this list of 21,000 transactions that showed you who received financing through the TALF. And there are so many crazy names on this list. I got a call from Senator Sanders' office, and he's like, dude, you have to look at this. You wouldn't believe the people who got money from the federal government during the bailouts. And so what we did is we just went through the list and we found the craziest names that we could find. And the craziest name was Christy Mack, who is the wife of John Mack, the then CEO of Morgan Stanley, who was involved with a company that got a $220 million loan from the TALF at a time when everybody else is getting foreclosed on and not being able to get financing and so on and so on.
All right, but Matt Taibbi, correct me if I'm wrong, but these are non-recourse loans, which means that if they can't pay them back, they don't have to pay them back. Clearly that's a deal that everybody in the world would like to have a deal like that. Plus, of course, they're taking advantage of the artificially cheap interest rates that are engineered on Ben Bernanke's side of the fence in Wall Street to keep this market, this scam going, where you can borrow money for close to nothing, and if you screw up, you don't have to pay any back, right? It's a non-recourse loan, correct?
Right, yeah. The way this worked is basically if you're Christy Mack or Wayne Huizenga, the owner of the Miami Dolphins at the time, you go to the Fed, you sign up for the TALF program, they give you a big chunk of money, $200 million. They say, go with God, go out and buy a whole bunch of securities, student loans, commercial mortgages, whatever it is. Give them to us. If they go up in value, you take them back and you keep the profits. If they go down in value, you leave them with us and we eat the losses. And that's basically the way this deal worked. Now they did have to pay a slight premium, what they called a haircut, to make sure that they all had some skin in the game, but it was generally less than 10%. So, people at this time, they were buying asset-backed securities for 30 and 40 cents in the dollar. So people, it was a great deal. You essentially got to go out and buy a whole bunch of distressed, undervalued securities with the government's money, give it to the Fed, and if it went up, you took them back, cashed it in, made a great profit. If it went down, the taxpayers ate it.
Now, the total loans in the system, they're increasing the total indebtedness of the economy as a whole. Doesn't anyone get it that the debts are only going up and not down? Why is that message not getting through to people, Matt Taibbi?
It doesn't really make any sense. The funny thing is the defenders of this program are going to say, what are you complaining about? The program worked. They had the credit markets were frozen in late 2008, and now after TALF, the credit markets were unfrozen. So the program worked. Why are you complaining? Well, of course the program worked. If you throw $1 trillion of public money at a lending problem, you're going to have more lending. It's not a secret that that's going to be effective. The two things that are a problem here is this is a massive government lending program that they essentially allowed billionaires and millionaires to be middlemen and get in the middle of these transactions and make gigantic commissions on all of them, risk-free. And then, just as you said, it added to the overall indebtedness of the system and couldn't possibly be a stabilizing force. I mean, originally the bailouts were designed to remove existing toxic mortgage-backed securities from the market. But this just created a whole bunch of new loans that now had to be paid back, and it just allowed all these people to step in and become middlemen who were servicing these loans with no risk at all.
Right, and as the debts keep on growing, the feds keep throwing more money at it, which is causing inflation. So people are paying $5, $6 a gallon in gas this summer. They're paying astronomically high prices for food as a result of this ridiculous scheme to throw money at debt that they borrow to begin with, thus increasing the total indebtedness and bankrupting the country by definition. There's no other result. But let's move on to this Carl Levin report. Senator Carl Levin says in no uncertain terms that Goldman Sachs lied to Congress and to clients. Your thoughts on this, and as you describe it, something remarkable. Again, using your gift for prose, you talk about the Hudson collateralized debt obligation, the CDO. Brilliant writing on this one. Talk about this, please, Matt Taibbi.
Well, the amazing thing about this is a lot worse than anybody really thought. A couple of years ago, I put out a report, and McClatchy newspapers put out a report, and all we really said was that Goldman was short mortgages at the same time that they were selling mortgages to people. So there was a suggestion that this was securities fraud because they knew that they had these loser toxic mortgages that they were dumping on people at the same time they were betting against them. But the Levin report goes far beyond that. It shows that Goldman actually sort of at the end of 2007, the very senior executives in the company had kind of a come to Jesus moment where they realized that mortgages were going in the tank, and they at the time they were net long mortgages. So they said, let's get close to home first, let's get even. But then they went on from there after they got out of their long position, and they bought a number of these enormous mortgage deals like Timberwolf and Hudson and Abacus, the notorious Abacus deal, and they immediately shorted 100% of those deals as they were aggressively marketing them to their clients. So in other words, they knew this stuff was bad and was toxic and was going to blow up, and they were betting against it immediately and aggressively marketing it to their clients at the same time. That's much worse than even I thought back then.
Right, and as the product was diminishing in value and the clients were losing money, my understanding is that Goldman made it impossible for clients to get out, so that they trapped them in this toxic, burning fire of trash, and they prevented them from getting to the exits, and they just kicked them in the head over and over and over again. Isn't that correct?
That's exactly what happened in that Hudson deal that you referenced. Here's the thing, Goldman was 100% short this deal. So the more this deal went down in value, the more these mortgages lost value, the more money they made. So as it started to lose value, and it started to lose value almost immediately, their clients, who included incidentally Morgan Stanley, were getting on the phone to Goldman and saying, hey guys, get out of this stuff, liquidate it, get what you can for it so we don't completely lose our shirts. And Goldman kept kind of dilly-dallying and stalling and not really giving them an answer, and they just didn't sell the stuff. Here, just as you said, the ship is sinking. These people are trying to get into the lifeboats, and Goldman is keeping them from getting their life jackets, basically. They kept them in these awful deals because the longer they held on to them, the more money Goldman made on the other side. They were crushing these guys as they were going underwater. It's unbelievably ruthless activity.
Right. Again, it's illegal activity, to put it more succinctly. The law says best price, according to the SEC, is mandatory, and you can't trade ahead of your clients. So here you have Lloyd Blankfein and a bunch of Goldman Sachs effectively gang raping their clients and laughing about it. Okay, let's move on to what you describe as the peasant mentality. Doesn't this have much to do with Wall Street criminals being above the law? The bottom 99% see the bankers as somehow special and above the law. How come the split in the psyche in America where they accept a gang rapist like Lloyd Blankfein as being godlike and at their own expense while they're going bankrupt? What happened to the American psyche? Are they on drugs? What's going on?
It's a really interesting question. It's really, really hard to explain. I think there's just been so much relentless propaganda, especially on the right. I think that there's a lot of this rhetoric out there that says that rich people and people on Wall Street are the producers of society, and we have to do whatever we can to enable them and prevent them from having any difficulty in paying taxes, because without them we won't have any jobs, and et cetera, et cetera. Therefore, when Goldman Sachs commits securities fraud or worse, we should look the other way, because these people are really the producers of society, and it would be counterproductive to put them in jail. What good are they going to do in jail, et cetera, et cetera. And this is the kind of thing you actually hear from people, and I've actually even heard this from government officials who are supposed to be prosecuting these matters. They'll actually say to me, well, it's good enough that we find them because that sends a message. In this world, the humiliation is really bad enough. Being outed as somebody who's committed an offense is bad enough. We don't say that about drug dealers or murderers. We don't say, oh, the humiliation is bad enough. We put them in jail. And I think we have to get to a place where crime is crime, and people who commit crimes go to jail, whether they're rich or poor. And we're just not at that place right now.
Okay, you mentioned propaganda. Clearly the propaganda is enforced. I mean, the big business owns the mainstream outlets, and they put out this trash to convince people that it's their fault that they're getting raped. Blame the victim.
Right.
But beyond that, it seems like in the United States, what used to be a mentality of free market capitalism and competition has given way to what I would call market fundamentalism or market theology, extremist views, where profits are worshipped in an extremist manner. It seems like America's become a nation of extremists, where they worship, and Lloyd Blankfein himself said, well, I'm doing God's work. Is it become this radical theocracy of market fundamentalists?
Yeah, you begin to wonder if that's maybe the case. I mean, I think from the general public's point of view, I think there is an undercurrent of sympathy for people who run banks like Goldman Sachs and JP Morgan Chase, because these guys are smart enough to make money, and so therefore they must be doing something right. It doesn't matter whether they got their money, illegally or not. I think that there's just an ethos right now in the United States that profit is to be sought at any cost, and regulations and laws are really not something to be taken terribly seriously.
All right, well, clearly the demand for explanation will increase exponentially as the price of gas keeps going up, thanks to the inflation engineered by these larcenistic criminals. All right, Matt Taibbi, thanks again for being on the Keiser Report.
Thank you so much, Max. Take care.
All right, and that's going to do it for this edition of the Keiser Report with me, Max Keiser, and Stacy Herbert. I want to thank my guest, Matt Taibbi of Rolling Stone Magazine. If you want to send me an email, please do so at keiserreport@rttv.ru. Until next time, this is Max Keiser saying bye, y'all.